Good morning, everyone from Singapore, and hello to all our friends tuning in from all around the globe. Welcome to today's session on AI for Good, AI-enabled future of farming. My name is Wei Min, and for those who may know, SGInnovate is a government-backed deep tech investor and company builder whose mission is to help entrepreneurial scientists build deep tech startups that are looking to solve big global problems. Our work also involves building a global community of leaders, thinkers, and doers to drive and scale up deep tech innovations in areas such as AI, healthcare, quantum tech, and autonomous technology across various industries. Artificial intelligence and machine learning are frequently mentioned in today's highly digitalized society. It allows for radical, disruptive, and imaginative deep tech solutions to deliver unrivaled improvements in people's lives. These opportunities represent milestones in the democratization of good health, clean water, quality housing to delivering on the UN Sustainable Development Goals. In today's session, we will learn more on how AI can bring value to the AgriFarm community and making the world a better place. We encourage for all attendees to share with us your thoughts on the topic or interact with our speaker by posting your questions in the Q&A tab just located at the bottom panel of your screen. Otherwise, feel free to just say hi and do a quick shout out from where you are in the chat box below. With no further ado, do allow me to pass the time to Alma Cardenas, AI for Earth Global Senior Program Manager at Microsoft for opening remarks before passing the time over to Joshua Woodard, Founder and CEO of AG Analytics for his presentation. Alma, please.
Hello, everybody. I wanted to make sure everybody can see my screen. Are you able to see my slides?
Alma, you may want to put it in a full presentation mode instead.
I think it is. No? Let me. Is this now good?
Yep.
Oops, I have two monitors and I have them on the wrong side. So let me see if I can just bring this. Hold on one second. Apologies for this. Anyway, I think we should get going. Hello, everybody. It is a pleasure for me to be here. I am in Redmond, Washington, and it's an honor for me to be here. And I hope everybody is doing okay after the really tough time that we all had last year with COVID-19. So there is some respite for all of us. So this year, we are starting a brand new year, and we hope we can get behind COVID-19 behind us. And I am super excited here today to open for one of our strategic partners of all time, Ag Analytics, Dr. Joshua Woodard. And I wanted to start by helping us set up the context of this discussion. As you know, climate change is probably one of the hardest problems that humanity is facing today. Not only will we have to feed our growing population, but we have to do this in a way that we mitigate climate change and that we protect our natural resources to avoid biodiversity collapse. And there are some numbers that we can put around this. Our planet has been transformed by agriculture. At least 1/3 of land is now used for agriculture. And in that, we use crops and we also use it for livestock. In addition to that, we estimate that at least 70% of global water resources will be directed for agriculture. And to top things off, agriculture is responsible for something around 24% of greenhouse gases emissions today. So we have this challenge. We have a lot of work to do to address this unprecedented challenge. But as unprecedented a challenge this is, we have also seen technological innovation happening at unprecedented rates. Today, we have cloud and AI technologies, machine learning, modern algorithms that are helping us in all industries. Digital transformation is having a great impact, allowing us to resolve very difficult challenges. So as big of a challenge we have with climate change, I think that we have technological innovation that can help us address those challenges. At Microsoft, technological innovation is what we do, and we are committed to put forward the best that we have on our technologies to help us, address climate change and help us drive for a more sustainable future. And part of those commitments, you can see them. We try to put our money where our mouth is, and we have done investments of around more than 165 million in our AI for Good initiatives. AI for Earth, as you can imagine, is dedicated to sustainability, environmental challenges. We have AI for accessibility, which is focused in trying to enable and empower people with disabilities. Around 1 billion people in the world have at least one disability. Our humanitarian action initiative is focused on the needs of children, protecting human rights, and of course, disaster relief. Cultural heritage is working at preserving culture and history. For example, protecting language. Last but not least, our AI for Health initiative, which was the last one that was launched. It was launched last year. You can imagine that this team had a lot of work to do on COVID. So today, AI for Earth is focused on bringing together environmental science and computer science and use AI technologies to help us, perhaps, as we think of digital transformation, we should think about the digitization of Earth systems. We need to learn so much more about our natural systems. And we hope that technology can help us, understand, model, manage, and ultimately manage, our Earth systems for the better. Our AI for Earth program consists of 3 key pillars. We have a grants program where 4 times a year we accept applications with project proposals to provide you with access to our technologies and education. We also work on machine learning and trying to find those common problems that could be resolved with algorithms to accelerate the workflow of environmental scientists. For example, image classification that come from camera traps, so that we can detect those images that have animals and we can identify what species that animal belongs to. And last but not least, data science cannot progress if we don't have the data required for those experiments. So we are working hard at bringing key environmental data sets to our cloud to provide to you open and without cost. The progress today for our grants, we are up to more than 750 projects. And by the way, around 100 of them come from Asia. We work, in addition to our grants program, we work with those that are already using technologies in an advanced way to learn from them. And we're trying to build a very strong ecosystem of partners. Our technology partners, such as Ag Analytics, are going to help us accelerate the rate in which we are using technology to resolve these problems.
Alma, sorry to cut you there for a quick while. I think the slides is not showing properly. It's still stuck in the very initial slide, I believe.
Oh my goodness.
Yeah, the slides are not changing at all.
I think we were not showing. I was not sharing properly the PowerPoint presentation. I am so sorry. And just as I am getting close to quote you, Josh, you had indicated to us before, and we wanted to capture this quote, that farmers are the original conservationists. So now, without more of my time, I wanted to introduce to all of you to Dr. Joshua Woodard. He is the CEO and founder of Ag Analytics. And Joshua, probably a founding strategic partner for AI for Earth. I know we started working with you at the foundation of our initiative. So we are very grateful for coming here with us and sharing some of your use of technology to help us address agriculture in the future.
Absolutely. Thanks for having me. So I'm going to share my screen here, and one second. So yeah, again, thanks for having me, Alma. Great to see you again. Yeah, we really got our start in some ways with AI for Earth and the program together with them, which was great, which really helped us kind of bring sort of bring to the next level a lot of the things that we were trying to do, and really getting it off the ground. So again, our company is Ag Analytics. I'm the CEO, Josh Woodard. I'll quickly tell you a little bit about myself and kind of the history of the company. I think I want to lay some context out that I think will be helpful, and I'll also show you all about our technology and what we built, and what I want to I hope to get across why we're building it, right? I think that's really important in the whole thing. So I actually come from this from a slightly different perspective. So back, about 10 years ago, I did my graduate work at University of Illinois. I'm actually trained as an economist. And at the time I was doing a lot of work in crop insurance, actually more actuarial science oriented applications. And so from there, I became a professor at Texas A&M University, and then moved to Cornell. And we spun it off about 3 years ago. Today we have about 12 employees. And I also, as I mentioned, sort of being deeply involved in insurance. I'm also an expert reviewer for the federal crop insurance program, and I can tell you a little bit about that and some of the work we're doing in that arena. So backing up a little bit, and again, like I said, I'll get into everything with the platform and kind of how we built it and why we built it. Excuse me, I think I just went out of presentation mode. Okay, so but before I do that, I want to tee up a couple of what I view as like sort of really important key questions. Okay, so when I started out, and this was kind of just by happenstance, I was actually still a grad student. I was doing a lot of work in crop insurance rating, and we were looking at the government program, and it ended up there was a lot of pricing questions there in terms of were the rates adequate, and it seemed very technical, right? But it really got us thinking about a couple things about incentives, which I'll come back to. So on a more sort of business sort of level, we had been developing these models, and we'd talked to some insurance companies. And my first experience of doing product development was really by accident. I had come up with a model that I thought was really cool, and I sort of had an idea for a product that there was an uncovered risk in the market, and the rating system was fairly complicated and all of that. And so we worked with an insurance company, ended up actually placing that product and kind of helped implanting it with them. And that was a great experience because I really got to see not only from the technical side of modeling, but also what I call sort of the IT side of administering financial products on the ground, but also like writing the policy, thinking about the marketing, the legal, the regulatory. In fact, the regulatory side is a really big deal because depending on which country you're in and what market you're in, those can be killers sometimes if you're not careful. So that kind of gave me this appreciation for everything beyond what I was doing, which was mostly like spatial analytics and dealing with satellite data and those sorts of things to do option pricing, essentially, and insurance pricing. So one of the things was like how do the technologies enable those things, right? And then taking it a step further, when I was at Texas A&M, we'd gotten commissioned to do a project, actually, and it was seemingly a very technical rating problem, but it was actually about conservation practices. And so what it was is there was a water conserving practice, and there was some concern why it wasn't being adopted, because it should have been higher yielding, should have been lower risk, should have been requiring less inputs, but people weren't adopting it. And so we went and we looked into it, and we actually published this in one of the major academic journals. What we found was, because of the way that the crop insurance program was structured in the U.S., in the U.S. they have this federal crop insurance program that's subsidized, but is delivered by private insurance companies. It's regulated in such a way that the structures and the prices are set by the government. So it ended up that the way that this particular practice was being treated kind of made it so that if in the presence of sort of fairly priced insurance and rules that were appropriate, the growers would have been probably adopting this practice and insuring it. And insurance is really, all risk management and financing is very important, because you can't grow and sustain innovative businesses without that. I mean, it's just a basic fact of life that you have to have those markets, and they have to be well functioning to transfer risk and raise financing and so forth. And if you had no insurance, what we found is if there was no insurance market, people probably would have been adopting this practice. But because of the sort of mistreatment of it, let's call it, because the systems were not prepared to price it and capture it, they were basically overpricing it, right? And so what was happening is growers needed the insurance, and so they were doing the old practice, even though it was riskier, lower productivity, and more expensive, which was really odd, right? So that kind of got us thinking, right? So what were kind of the preconditions in the market in interactions with those technologies that were resulting in people doing or not doing things, right? So fast forward a little bit more, one of the things that we found that was always a big constraint was data, right? And I'll come back to this at several points, is, getting the right data was always really difficult. How to get on that, okay? And the last thing I'll mention is kind of, I view all of this stuff through the lens of, you have to hit a couple of criteria before you can do any of these things. Like, first, what is going to be the business model? So it's not just the technology, it's not just the business model, but it's also the people, right? So it's also how people are going to respond to those systems. So a necessary but not sufficient condition for all of this stuff is always farmer adoption. So it's like, if you can't get growers into what you're doing, it's not going to work. So again, you'll see this come up in a second. Second is, well, the parties, if you're thinking about solutions, it's like, well, why haven't they done that, right? I mean, banks and insurance companies are pretty smart in other financial institutions. So if they're not doing something, why? We should try to figure that out. We have to look at it also through the regulatory framework. Okay, so the things that I'm going to show you now is around really these five elements that we focus on. So one is around farm profitability. The other is thinking about how to use this in lending systems. So for things like appraisal automation and underwriting support. The fourth is on insurance designs. And then the last being, which is very related, is around ESG goals and so on and so forth. So what is Ag Analytics? I'll tell you about what Ag Analytics is. So Ag Analytics is a platform. We're connected with farm equipment. Growers can come and sign up on our platform. And then we also build a variety of different financial engineering products. So we did our first integration with a major equipment company about 4 years ago. So we currently have over 400 million acre years of precision data in our system. So these are basically IoT data that are coming in. So it's not satellite data, it's literally data coming off the equipment on sensors and so forth that are very detailed about what was planted, when it was planted, what were the varieties, what were the chemical inputs, so on and so forth. And I would say that the majority of it is in the US, but we have this all over the world. And then we also maintain a pretty large stack of basically satellite data and other data that we use for model building. For solving all these solutions, like, you basically have to have good partners, right? That's another precondition of all this. So, in our case, one of the things that we wanted to solve was okay, there's all these new systems coming online for precision ag data and IoT, but why aren't they really being used by the financial sector? Like, why aren't the growers using those to, say, report to their insurance companies, or why aren't the banks using that to, price the risk on their loans? And in some sense, it was the growers themselves kind of massively underutilizing it, to the extent that if you ask most growers, which fields are you really making money on, most of them won't be able to tell you, and they certainly probably can't tell you where inside the field where they're making money. They might be able to give you a yield map based on some of these data, but most of them, in most cases, actually how profitable it is not the same. So we also work really closely with growers and, of course, with Microsoft. So kind of at a high level for the modeling side, before we get into the applications, kind of what you're trying to do is bring together data from the farm equipment on the ground, data from environmental sources, satellites, and so forth, and weather data, and to bring that together in order to do different models. So before I show you a demo of the system, I'm just going to talk a little bit about these precision data. So they're very detailed. This kind of gives you a visual of what they look like. And so I'll talk about how we actually bring those data in the system in a second. But basically, you can see exactly where the equipment has went, what the yield was, so on and so forth. So it's really interesting set of technology. So I'll show you our platform we built for farmers, and then I'll jump back into these applications that I think are really important around lending systems and so forth. So this is our system that growers will see. Basically, there's a mapping application. As you can see, we're integrated with John Deere, Climate, and CNH, so farmers can bring these data in the system. One of the keys was we made it really easy. We wanted it to be that just a sort of one-click integration. And so what that does is then it brings in all their maps. We summarize all them so they can actually start to do cost breakdowns. And so we also do a lot of data collection in terms of prices, because the equipment doesn't know the price of things, it just knows the quantity. So if you want to know things about profitability, you have to have prices. So a lot of it is just, and we spent a lot of time on this. We started building the profit mapping tools a couple of years ago, and I thought, oh, no big deal. We're just layering some maps together. But really to get and this was a lot of this was new to me, was the UX component, right? So to get adoption of these financial space is actually quite difficult. And even though in concept some of this was seemingly simple, making it sort of user friendly and all of those things and flexible was actually really interesting to learn about for us. So our platform for growers, it's very flexible in terms of easily allowing them to bring data in. They can sort of combine it with other data like satellite data. And we also have a lot of features that let them do things like you're seeing here, which is really getting a breakdown of not only which, say in this case, varieties are producing more, but based on how much they cost, are they actually profitable? Or if you want to do a zone analysis on part of your field, whether it be relative to soil types or maybe where you put an application, to really understand not just the production impact, but given how much you're spending on that, how well is that going to serve you? Okay, so this is just a quick demo of some of those different tools. In addition to that, I won't go through the whole video. You can go to our website at profit.ag if you want to see that in more detail. But we also have a bunch of other data feeds for growers. So all the things like satellite data and so on and so forth are really simple. Kind of we deliver it in a kind of simple way there. So that's our Profit Layers platform that we call it, and that sort of gets growers to an initial kind of starting point in terms of starting to use their data and making it easy to tap into their IoT systems and so on and so forth. So, and by the way, I would have thought that we would have, that this wouldn't have been such a big solution, but just something as simple as getting profit maps is actually quite difficult. So after that is where kind of a lot of the real fun starts, right? So another set of activities that we've really pioneered is instead of just saying, well, we can look at maps, is to say, how do we combine that together with external data sources and at the subfield level, not only on one field, but in, lots, thousands and thousands of fields. How can we scale that up to train our models? Okay, so that's a lot of what our technology is that we built, is automating not only how to transform the data and reproject it and get everything kind of on a common basis, but to apply machine learning methods to it to do things like yield prediction and crop identification. And I'll show you why these are relevant in a moment, like why we want to build these kinds of models. But most of it sort of revolves around this common theme of, we have data on the ground, we have data coming in from satellites, we want to train models to either predict things that are going to happen or get a better view of things that did happen in the past, where we might not otherwise have data in the market. And so we've developed a lot of different kind of foundational models around doing things like, tillage identification, other kinds of practice identification, and so on and so forth. So that's kind of the technology we built, at least that what you kind of see from the front side. But going back to the insurance and the banking and all that, where my experience was, I sort of thought about a couple things. Okay, so the first was, do these programs, and market structures and so forth in insurance and in lending, are they really like conducive to adoption of conservation practices, okay, and other sustainability practices? We had found some cases, like I mentioned, in insurance where we knew that they weren't, right? And so we started thinking about, why is that? Like, what technologies are missing, and why might you want to do that? So from a grower's perspective, let's just think for a moment, like, let's say that we could solve that problem, right? Like, we can use technology to sort of better enable the information loops to allow lenders to do things like, give lower interest rates for regenerative practices and so on and so forth. So we start thinking, okay, does this hold water? So for farmers, I think yes, right? So you're talking about if you're lower risk because you're improving your soil health or you're being more efficient, you should probably get lower. That should lower your cost of capital, right? If the markets are kind of frictionless and there's perfect information and all of these things. One of the ways through which that could probably happen is if you can think about pooling large amounts of capital through securitization to get interest rates down and to create other financial incentives. Okay. You also have to have the data. So you have to have the data feeds to do the verification. And one of the kind of offshoots of that is whether or not you can sort of monetize these ecosystem services. So those are a handful of things that sort of could be unlocked for farmers if we could better, not only better verify and sort of help them choose which practices through, business intelligence of what's working and what's not, but also some of these other benefits that might not be so obvious around some of these emerging markets like credit, carbon credits and so on and so forth. So for banks, there's also a lot of potential here in terms of being able to affect improved underwriting. If you have better underwriting and you're able to price those loans more efficiently, you should be able to have lower risk and higher risk-adjusted return. I think there's also a lot of kind of off-market benefits around meeting your ESG goals and so on and so forth. And then if you can think about from the perspective of if you can track that, right? Like if I can characterize my portfolio, say the collateral or the properties that are backing up my portfolio that I'm lending against, I may be able to take that information. It might be good just to know for my own internal, say, capital models, but I might actually be able to take that to the market and say, are there concessionary investors that if we can verify and kind of rate or score, how the environmental impact is on our loan portfolio, we should be able to increase the supply of capital or lower our financing costs that we can then pass along to farmers. So then there's also a lot of benefits to the environment and the public from this, just through virtue of the fact that if you can complete these loops, you're going to get all of those benefits of more conservation practice use, more carbon sequestration, lower erosion, improved water quality, and all of those sorts of things. So then you'd say like, well, this all sounds great. Why aren't we doing this? And the answer in this case is, well, there's a few challenges, and some of those challenges are data related. Okay, So these IoT systems to, bring in farm data and have satellites, these didn't always exist. So now it's even versus 10 years ago. I mean, it's like night and day. There's a lot of data coming in now. There's still some issues. We don't always have all the data we would like, and sensors are getting better, but those are that's one of the challenges. The second is the analytics or the modeling side, so-called, machine learning and statistics and all of that. And then the third, among many others, is sort of regulatory. So those are kind of your challenges and barriers there. But if you can get into a place where, you can kind of bring those together, there's a lot of things that you can do to help address problems like climate change, and thinking about how you would incorporate that into lending analytics. So one of the things that you have to also do, in my mind, when we talk with banks and insurance companies and so forth, you got to try to view it through their lens. For me, this was sort of easy because my training was more in financial engineering than it was originally in sort of IT or anything like that. So I kind of view this whole problem in a couple of pillars. I think the first pillar is you really have to think about, like, what is the on-farm impact? Okay. So, and this is true for insurance markets too, and I'll show you some insurance examples. But so the first pillar I kind of think of is the on-farm risk assessment. So, like, how does adoption of conservation practices or regen farming, like, how does that actually affect the on-farm assessment of it as a business? Okay, so you're kind of breaking it in typically two parts if you're thinking about lending. The first is what is going to be the impacts on the collateral or asset values. So if I'm improving soil health, or if I'm doing improvements to the property, that's going to affect my assessment of value. Okay, so that's the first thing. And so for those of you that know lending and the 5 C's of credit, you can see how that kind of links back. The second being, how does that impact, if you're making a loan, how does that impact your probability of default, and secondarily also your loss given default. So those you're typically concerned about, like, what is the earnings impact going to be? So, what is the impact on my productivity going to be? What is the impact on my costs going to be? And I'm talking just on the farm, like, forget the environmental impact. Just if I'm using those practices and they're making my soil healthier, how does that flow through? And then there's some other considerations too, like, technology adoption risk, and whether or not the ownership structures are going to be kind of conducive to it. If you're renting the land versus if you own the land, that is going to impact how you might adopt practices and who's going to ultimately need to pay for it, et cetera. So then the other part is the off-farm sort of externality side, the off-farm environmental assessment. So, and this is the part that, the growers, they may care about because the market is competitive. It's such that if you're not kind of monetizing those and finding a way to link it to growers, it's not that they don't want to do it. In fact, our partners that are pushing most of the environmental in conservation sort of innovations are the grower associations themselves. Like Alma said, I mean, growers are really the original conservationists. But if the market's not really like conducive to it, so if either, let's say that your insurance is relatively overpriced, or your loan is relatively overpriced, or whatever the case may be, it kind of creates an implicit disincentive, right? And those are very real, and we've proven that those are very, very real. So, but the other side of this equation, of course, in that line is this off-farm assessment. Okay, so and that means that you have to be able to monitor it, you have to be able to quantify it, so and you need to be able to track it. So if you're using those practices. So one of the things that we've done is, using all those models that we built, we've started to think about, okay, well, what's a score that we could, we started out with thinking from a score perspective, right? And one of the things that we do as a company is, just like, in some of my other walks of life where we were building rating systems and kind of implanting those with insurance companies to offer new products, we use this intelligence here, and are working with banks to kind of implant that technology so that essentially, like, they can point to a property, and they're, they have a whole portfolio of properties, and we've automated it so they can point at a property and they can quickly get a sense of, for the last 5-10 years, what practices have they been using, and then we've come up with ways to score that to map practices into environmental outcomes. So let's say you're using no-till and cover crops and crop rotations, and you're keeping your soil healthy. That's going to have big impacts on, reducing your nitrogen footprint, increasing the amount of carbon you're sequestering, and then also reducing soil erosion. So we can actually put scores on that for lenders using our technology. And part of the question is like, well, why us? Like, why would we do that? Why wouldn't they do that? And the answer is, I mean, if you think about in the United States, for example, you have a lot of lenders, right? So you have about 40% of the market that is the farm credit system. That's like about 80 or 90 banks. And then you have a handful of community banks and so on and so forth. So it doesn't make sense for every single bank to build their own, John Deere integrations and profit mapping systems. And so that's where the technology scales really nicely in our experiences. They all kind of need the same thing in some sense, but yeah, it doesn't need to be rebuilt, 90 or 100 times. So this is one of the things that we've been working on that's really interesting is automating that. And it's not that there's not other conservation scores out there, but one of the problems that we wanted to tackle was, okay, so if I can send someone out to a field, I guess I could find the histories and I could do that manually. There's some programs like that. Most estimates are that's going to cost around like $40 an acre just to administer. So if you have a subsidy program, for example, that pays $40 an acre to adopt some practices, but it costs $40 to verify it, it's like you just killed your program, right? So the technology that we've developed, we can administer this for more like cents on the acre. So it's just totally game changing to be able to go in and do that automatically. So another thing is we've also developed a lot of things around land valuation. Okay, if I want, so this is kind of interesting. So one of the biggest sticking points in the whole lending process is the appraisal process. So we have really good ground intelligence on what this stuff is worth and how productive it is. So one of the things that we've done is like you're the lender and you can basically draw the property in our application. We can not only tell you, what does the score look like for these conservation scores, what are the practice histories, but also how does that rank relative to other properties. And the long run goal that we want to get to there is to be able to implant that to actually be used in their underwriting. So imagine if you could say, okay, I can either wait 30 days and send an appraiser out there. It's going to be more expensive. And maybe for some properties you have to do that, but there's at least a class of properties that probably a large percent of the market where you don't really need to do that. If it fits some underwriting criteria, you can just automate the assessment. And so that's one of the things that we're working on, that we've had a lot of success on. And then along those lines, and this is a little newer, this stuff is more recent. So we've been getting a lot into object identification and segmentation. So imagine if you look at a property, and there's all sorts of new, satellite data out there to do this really well. And we have good ground truthing data. So not only can we see practices, but we can also see things like, did you build a new road? Is there a new structure? So we're starting to place these solutions into the market as well. For anyone. And this really also applies to anyone that has any interest in a property, whether you be land management or so on and so forth. So those are some of the things that we're doing in lending. In the last few minutes here, I want to tell you also about the insurance side. So back to this original kind of thing where I started my journey was like, we never had the right data that we needed. And we knew how to do modeling, but we didn't really have the systems in place to be able to kind of scale this. Then on the other side, on the policy side, there were all these barriers. So we've done a lot of research on this, and one of the things that we found is that the way that the insurance programs are designed don't always dovetail necessarily with conservation practices, especially when those practices are improving the soil health and lowering the risk. And so when you look at the market, they might say, well, we're not treating them differently, we're charging them the same. And my answer is like, well, if it's lower risk and you're charging the same for two different practices, you're actually overcharging one. Okay, so that creates some implicit disincentives, and especially when it costs money to implement the practice, right? And you have to have insurance as a condition to be in business, particularly in a lot of cases in the US, and you can't even get financing without having insurance. So the punchline is like, well, we have to fix the premiums and the rates and also figure out how to automate the data transfer for verifying these. So again, what are the challenges in that? The challenges are very similar to what you saw before. So, do you have the right data? Can you do the analytics? And how do you push it through the regulatory system? So one of the ones that we're working on right now that's really interesting is the following. So there is a process, for example, in the US, if you want to change which products are available, there's this process called 508H. Okay, and so we've submitted several of those in the past. I'm a reviewer, so I know, we've done a lot of reviews on that other companies have submitted. And so one of the problems that kind of got my attention here that was really interesting was around nitrogen. So the way that nitrogen works in a lot of ag sectors is the following. So nitrogen is relatively inexpensive relative to the grain that sort of emanates from it, and so there's a risk though that you might not have enough on the field. So if it rains too much, or if you're doing what is called split apply practices, where you're putting nitrogen on at different times to be more efficient in terms of when the plant needs it, that it's there to be uptaken. The problem is that there's risk associated with getting back in the field. So it might be something like this. I go out and I plant and I put some nitrogen down when I plant. And I only put a forecasted, say, 30% of the needs of the plant. Well, now in, say, 6 weeks, my plant's going to need more nitrogen. If I don't get it, I'm going to get a really bad yield failure. Okay, we're talking like orders of magnitude greater than the cost of the nitrogen. But there's all sorts of reasons that you might not be able to get out there. Primarily in the spring, it's still pretty much spring, early in the season. It can be very wet. Okay. And so what farmers do, and there's a lot of research on this, they routinely over apply. So there's a part of the yield response curve over which you kind of top out your yield with respect to nitrogen, and it kind of plateaus. So what will typically happen is they'll actually put on more nitrogen than they need, because if it's on this plateau function and it comes around and it rains a lot and washes nitrogen off the field, they want to make sure they still have enough. So interestingly, the way I think of it is like they almost replace, it's like instead of financially insuring that risk, they use like physical insurance, right? So it's like they purposely apply too much nitrogen. This is not me saying it. I mean, there's lots of research on this, and that's not a knock against farmers either. What I see when I see that is I see that there's an opportunity for a risk management product, right? So I see that, if people didn't have to worry about that, would they put on just the amount that they needed, and would they time it better in the event that they were covered if for some reason they were prevented, right? So we thought through that problem, and one of the things was like getting it through the regulatory system, which we're working on. The second is having the right data and models, to be able to pull it off. So we were able to check that box. One of the things you need to do is you need to be able to see as the data is coming in, is the right nitrogen plans being established, and so on and so forth. So so that's another interesting, I think, where we've been able to kind of take all these collective sort of data in systems and apply them in such a way that we can enable new financial products that actually change how people do things. And so, so we're working on some things around that that I think will, be important. And again, there's a lot of models that we use. Part of what we will, if you want to have a product like that, or you want to create, new intelligence around that, one of the things that you need to do is also have better, you need to be able to tell when they're planting, and so on and so forth. So we have a lot of AI models that we built around detecting, planting date, and so on and so forth. Another thing, and this isn't really as much to do with conservation, but or regen ag, but is an important problem that we're also solving, and we have a solution that we built around this. Is it sounds simple, but just figuring out what was planted and what was produced. So just documenting that for the process of administering insurance. So it ends up that, back of the envelope estimates are the industry in the US probably spends around $500 million a year doing acreage reporting and loss adjustment. So just literally, like, grower has a loss, they have to call someone to say, we think we had a loss. They send a loss adjuster out. So the program, the US program is about $100 billion program in liability, about $10 billion in premium, and close to probably 3 to 5% of that is for loss adjustment expense and reporting. So on the other hand, like, we have all of these great AI models. We have all of these data feeds into the equipment. So one of the things that we've done is, and it wasn't easy because it has to be reported in particular ways, and you have to have growers on the platform, and you have to have pipes into the insurance companies and so forth. But it's basically just automating that acreage reporting process. So most of the discussions that we've had, and this is sort of starting to grow up in the industry a little bit, but it's probably still on the order of like maybe, I don't know, only a few % of the acreage is reported in any kind of automated way. So what we've kind of built is two-pronged. One is, well, let's first of all make it possible to actually get the data in the system from the tractors and have it transmitted. The second is almost like, think of it as like the, I don't want to call it the fraud protection, but almost like the AI layer where we cross-check and say, okay, here's what the equipment said came in terms of off the tractor. Can we verify that that really happened? So we built some stuff around that. So I hope that gives you sort of a sense of kind of some of the connections between kind of the data, the policy problems, and sort of the market or kind of business sort of operational, transactional sort of processes that we can improve using a collection of these. And the thing that's really important about it is it's not just the case exclusively that we're kind of improving the ability to transact. It's like we're improving the ability to transact, and that's allowing the incentive structures in the market to work better and have good environmental outcomes that are really like kind of win-win-win, right? So it's not just about higher profits or anything like that. Of course, that's part of it, has to be part of it. There's nothing wrong with that. But you can also unlock all of these opportunities, and so it's not just the technology, not just the models, but also how you kind of implant them and create products around them in the market. So in the last couple of minutes, I'll sort of shamelessly plug our other things that our platform. So like I mentioned earlier, this was actually one of the projects that we got started on. It helped us really propel things when we first spun off the company. So thank you, Alma and team. We basically built the first versions of all of our like yield AI, crop identification, et cetera, in this work with the Microsoft AI for Earth team in this grant that we worked on. Another thing that was an outcome of that is, in addition to kind of the grower kind of platform, we also have an API kind of marketplace almost, where we make a lot of our models and data feeds available. A lot of these are sort of things like we built them and realized that if you want to solve these problems, you need these as like baselines in addition to other things. And so instead of just keeping all of our APIs kind of internal, we have a little marketplace where you can go, and we're always iterating on that. We also, through the Azure Open Data Program, together with some of the AI for Earth folks in the Azure Open Data Program, we make a set. So we procure that and work with them, and then it's available for anyone. So if you have an Azure account and you use, we basically have blob storage where you can access all of the tiles, and we basically do a couple things. We cogify them and turn and make them into cog TIFFs and kind of organize them in a way that's pretty convenient, so that if you are on Azure and you want to create programs to do, basically if you want to do this stuff for real, you need to be doing range reads on cogs and stuff in your processing and setting that up with the right infrastructure. And so, yeah, we make that available on Azure. And then the last thing is, and this is more of a grower focused tool for more, like I would say, maybe consultants in that. A lot of you are familiar with ArcGIS. So we built this ArcGIS add-in, which is really cool because that process that I showed you where you can go to our website and, in a couple of minutes, like integrate your equipment and see all the maps and, build the profit analyses and everything. This tool is the same thing, but it lets our server hook to ArcGIS Pro. So it's kind of like an add-in that you would use in, say, other programs. It's very similar. So it basically creates a ribbon in ArcGIS. You can click, you can integrate your equipment, and then our server does all the work of, processing all the raw sensor data and the proprietary formats and putting them in like nice shape files and rasters, and you can access them directly. And then we also make a lot of our API feeds available through that add-in. So I'll stop there. I think I'm right on time, surprisingly. And yeah, I know I delivered a lot there. but I hope that what I was able to do is kind of show you a little bit about what our company does. We do a lot of other things too, but what we do, how we do it, and more importantly, like why we do it. Like what problems can you solve bringing these tools to bear with sort of the right set of business expertise. And I think, we're just a very small company of a dozen people, and look what we've done. So just imagine what's possible, not only say in the US, I mean, there's a million other applications, but, globally, I mean, it's huge, it's massive. I mean, and I think there's going to be just massive growth in this part of the market, linking up these technologies with sort of the kind of regen and agricultural focus. And I think the global market, I think in a few years, once this is really leveraged in other systems, I mean, it's going to be way bigger in other places than it even is going to be in the US. And it's just getting started in the US in some sense. So it's going to be a really exciting time. And I hope to have the opportunity to work with a lot of you as that builds out in the coming decades. So.
Thank you, Joshua, for sharing such great work from Ag Analytics, as well as the work together with Microsoft AI for Earth. So perhaps now we just take some time to just answer some of the questions from the ground. So I think there's a few parts in which you have mentioned in your presentation about the kind of data that you actually receive from farmers, from the ground and things like that. So I think that's always the problem with AI, you see. I mean, the output is always dependent on the quality of data that you receive. So on this point, I would just like to combine two questions that we received, one from Tuan and another one from, I apologize if I pronounce your name wrongly, Kyo or Seth, from Myanmar. Is that how do you think Ag Analytics solution could actually work in settings where there's limited data and where farmers might not be as tech savvy in Southeast Asia? And just adding on another layer to this particular question is that how applicable do you see the regenerative practices, reward schemes, and carbon credits being applied in these developing countries in Southeast Asia?
Yeah. It's a good question. I think that's a complicated question, very complicated question. There's a lot of aspects to it. So I think the first part is, can these technologies sort of be used in some of these other markets where maybe they don't have that type of equipment and so on and so forth. I think about that a couple ways. So on the one hand, I think that the costs of things like sensors and all of that and that kind of technology is really coming down. I don't know how many years it will be until it's, sort of prevalent everywhere. But if we judge by other markets, I mean, I think we might be surprised in the coming years how quickly the costs of that stuff start to come down. I mean, a lot of these places already have, cellular connectivity and internet and so on, which is really interesting, right? I mean, in a lot of other countries in the world, they kind of like, in the US we had, and I'm not an expert on telecom per se, but just kind of observing. I mean, I did a little bit of work in Kenya, for example, a few years back, where we were building insurance programs using satellite data in very rural areas. And we went up there a few times because we wanted to talk to people and see what they were doing. And what shocked me was that, we're several hundred miles from, the nearest city, and they had cellular service, but there was no phone lines and there was no. So I think I think it's maybe not as far off thought to think that equipment might start to be equipped. There's also a lot of companies, like if you look at companies like Hello Tractor, where they're kind of helping mechanize a lot of the production systems in places that traditionally didn't have that kind of equipment, and they're doing it with cellular technology and GPS technology to help mechanize more. So I think that's part of it. I think the other part is, to the extent that you can have apps that are friendly, like we have a whole thing on our platform. You can actually use our platform without precision ag data. It just makes it better. We've also built a lot of things where you can go in, you can draw your field, you can, create your production plan. So you can almost use it as like a GIS, I don't want to say an accounting system, but you can go in and actually draw or pre-populate templates on what you applied, and you can use it as like a record keeping system that's field specific. So if you had a field where like you put half as much fertilizer here than there or something like that, you can do that without any precision equipment. Satellite data you have everywhere. Some of these models flow over to other places, better or worse, right? So if it's something like a crop identification model, or say like a tillage identification model, well, we have satellite data globally, and typically what we're doing is we're using ground truthing data with satellite data to train the model so we can project them anywhere. Some of those models will work really well. Other ones like yield models, maybe not as well, right? So they're just because you can see greenness doesn't mean it's yield. So some of those models don't necessarily work well on yield, but it ends up that like corn looks like corn everywhere. It gives off like the same spectral signatures, in a lot of cases, whether it's grown in this location or that location. That's more of a crop, sort of property, I guess you would say, or something like that. So yeah, I think the last thing I'll say, and sorry, I'm kind of going maybe overboard on this question, I'm just thinking on the spot about it, is there are a lot of potential for the larger financial institutions, I think, to use a combination of those technologies that maybe doesn't necessarily require the grower to use it on the first order in order to enable other programs that they might want to administer. So I think there's some of that too, but I think, yeah, it remains to be seen. So very complicated questions in there.
It's all right, I guess. Then I think for the last few minutes, maybe I'll just once again combine another two more questions that's on the ground. So how long does it typically take for smaller scale growers to get started with basic data? And will Ag Analytics be working with high-tech vertical farms where data is highly monitored and uniform? Especially like this, I think this is more applicable for like highly urban city like Singapore, for example. Yeah.
That's a good question. I mean, well, the first part of your question is how long does it take someone to kind of get on our platform and start using it? It's pretty fast, right? And we don't claim that our platform will do everything for everybody. I mean, we're always building new features and that, but it's not really hard to sign up and start using it. Whether it does what you want, right, is a different story. I mean, I think we tend to be very kind of row crop centric, particularly because a lot of the big environmental problems are happening in these big markets, and that's where we kind of have the best data. And there's a lot of research in terms of how to improve that. The financing markets are the largest, and so that's where most of our expertise is. We don't do anything in vertical farming. So I probably shouldn't speak to that too much, just because it's not my area. But yeah, I know that there's amazing things going on in terms of like other companies that are building like these crazy greenhouses, and there's just tons of innovations there. But that's not my expertise really. So
I guess it's fine. I think you have already shared very, very much more than to all of audience out there. So maybe let's just wrap this up a little bit. Do you have any, say, final words to share with our audience for them to take home as part to wrap up this entire session?
Yeah, I do. So, well, first, thank you for taking an hour to listen to what we're doing, and I just want to say, yeah, feel free to reach out to me personally. You can find my email address at our website, or just write our support team, and they'll get it to me. But it's josh@analytics.ag. So feel free to reach out to me with anything at all. I guess the only thing I would kind of maybe leave you with, and I don't want to say like that it's like super wise advice or anything, but just kind of how I think about the market is, I think to take a lot of these things to the next level, you really have to think about where the transactions are happening in the market. And if you want to have an impact on the regen space, I think, my opinion at least, if you're not doing like the basic, say lab research about, which practices work, and you want to think about the level that we're talking about it, which is how do you bring together sort of these larger technology stacks to really solve those problems, you really have to think about who are the players that exist now and how do they do business. And even if you find that like, hey, it's really inefficient, like there's usually reasons for that, and you have to figure out why it's working like that now in order to improve it. And it almost has to be attached to transactions in order to get traction. Like think of the carbon sequestration and so forth. Like the thing that will make that work is, well, maybe partially regulations, but it's mostly going to be if people are willing to pay that, right? Or think about organic. Why has organic been successful? Well, it's great if it's organic, but really the reason that it's been successful is because you've created a link to consumers in that case to actually monetize that benefit. So, it has to be, you have to figure out how to really, I don't want to just use the word monetize, but you have to figure out where the transactions are, and you got to figure out like, how does your technology improve that? And how can you leverage that to have better environmental or social outcomes or whatever? But if you just hope that it will improve the environment, or you just think it'll be good, it's not enough to actually make it get traction in the market. So I would just encourage people to think about those problems and solve them. So.
Yep, thank you so much. And also, thank you for sharing so much of your knowledge as well as all the great work that is done by Ag Analytics. Yeah, so that being said, I would also like to represent SGInnovate to thank all the attendees who has stayed with us till now. I'd like to say a big thank you once again to Alma and to Joshua for all the wonderful points shared in today's webinar. So for today's attendees, do keep a lookout for our post-event mail, which will contain a recording of this session, and do reach out to us at events@sginnovate.com if you'd like to connect with any of our speakers or simply have a chat with us for collaboration opportunities. Do also remember to give us your post-event feedback when you exit the webinar or through the post-event mail as well. With that, this is Wei Min signing out from this webinar. Hope that everyone have a great day ahead. Stay safe, stay healthy. Goodbye, and once again, thank you, Alma and Joshua, for your wonderful participation today.
Thank you very much.
Thank you.
Yeah, thank you.
Have a good day. Bye-bye.
Bye-bye.